This is a great one because I very much respect both Jonah Lupton and Money Mark Gomes over here. They have different areas of specialty, and their thoughts on this are really converging, which is interesting because Mark Gomes is really a micro cap value investor, and Jonah Lupton, I know you as a growth investor, and you often don't agree on much. But in this case, I was surprised to see, Mark, that you're interested in this larger market cap company. Um, and just kind of matching up with Jonah. And then last night, I heard Gav from Wolf Financial call this as a trade of a week. And at StoryTrading, we kind of look at fundamentals, sentiment, catalysts, and technicals all at the same time. So we got the fundamentals from Mark. We got maybe the sentiment and the catalyst going from Jonah. The technicals right at the 200 DMA. So I just wanted to get your thoughts. Why don't we start with Jonah? Jonah, I saw you down in Orlando. I know you've been talking about Celsius for a long time. And I didn't really warm up to it until I met you in Orlando because I really didn't understand how big the market was when you compare it with like Monster and with Red Bull. So why don't you give us a little background on that, and then Mark will get your perspective, and Gav as well.
Yeah, so I've been in Celsius since last summer when this stock was in the teens. It's had an incredible run for the last 15, 16 months, probably even 20 months. I think this stock was down in the mid-single digits at the March lows of last year. So, I mean, this stock, if you bought it at those March lows and held it, you probably have almost a 20-bagger from then until, what was the top just a couple weeks ago going into Q3 earnings. So, I mean, you've seen massive multiple expansion, but you've also seen massive revenue acceleration. I mean, massive acceleration. So, Q3 earnings will start there because that's kind of what, created this sell-off in the stock. So Celsius was trading in the mid 90s going into Q3 earnings a couple weeks ago. The estimates from analysts were about 73 million revenues. I was looking for about 85 to 86 million. They came in at 95 million. So they beat the analysts. They beat the consensus estimates by 30%. So everything top line looked great. Year over year growth was 158%. If you back out or slice out the international growth, which is basically flat, you have U.S. growth, or what they call North America, up 214% year over year. So, I mean, this is a CPG, consumer products company that is growing at 214% year over year in North America, although that's basically just U.S. They're doing it mostly through DSD. So this company, before the pandemic, was primarily DTR, which is direct to retailer, which means they ship their product to a retailer's warehouse or distribution center, and then it gets shipped to the store, and then someone from the store, meaning an employee, has to stock the shelves. Well, as Bang went over to Pepsi to be their distributor, that opened up Anheuser-Busch for Celsius. So Celsius slid into all of Bang's former DSD partners, these distributors that have regional territories, and they deliver directly to stores like Costco and Target and Walmart and the gas stations and the convenience stores and so forth and so on. So that's what's really driving growth right now. They have 224 DSD partners all over the country. They're authorized in 100,000 stores right now. Actually, it's more than that. It's 118,000 stores right now that they're authorized in. Now, they're not in all of those stores yet. Some of those stores they won't start showing up on the shelves until 2022 when we get into our new resets. So it's even though growth has been absolutely phenomenal for the last year and a half, it's not about to stop anytime soon because they keep on adding more stores, more DSD partners. As they take market share from Red Bull and Monster, those stores are going to want to start to, take shelf space away from those two brands and give it to some of these up and coming brands like Celsius. And then Celsius is also putting coolers in some of these top locations like the CVS's and Walgreens, the gas stations, the convenience stores, because over 50% of energy drink sales actually happen in those grab and go locations versus the people that are walking into Costco or Sam's Club and grabbing a case at a time. I also think the gross. So right now, the problem with Q3, I mean, obviously we can start to pick apart what went wrong. The only thing that really went wrong was gross margins, and gross margins were, came in lower than expected, which then resulted in lower operating margins and net income than what was expected, partly because of supply chain problems. So they had to spend more money on freight. They had to spend more money on aluminum cans. They made some significant investments in Q3 to fix those problems. So they've tripled the number of warehouses that they're working with. They've signed new contracts with U.S.-based can suppliers, so no more shipping this crap over from overseas. So they are trying to improve, everything from infrastructure to logistics to distribution to suppliers in an effort to get those gross margins back to where they were pre-pandemic. And the company says that we should see those gross margins go up very soon and start to normalize as we get through 2022. So we should be able to get back into the high 40s, if not low 50s, maybe by the end of next year. So this company will start to be, they were still profitable in the quarter, but just not as profitable as analysts and investors had expected. Gross margins were 39.7% in Q3 versus 47.6% in the third quarter a year ago, and that's without freight. If you back out the freight, so technically gross margins were 48.6% in this past quarter, but that's not including freight, and obviously freight's a big cost. So I mean, my conviction has not been shaken by this pullback. I just posted a tweet saying that the stock has pulled back about 35% from those all-time highs, which they hit. Technically, they hit those all-time highs in the pre-market last Thursday morning when they reported earnings. So like I said, they were trading in the mid-90s going into the print. The print looked like they blew out numbers because they beat revenue estimates by 30%. And then as investors started to digest the news and they saw the lower gross margins and they saw the 50% lower income than a year ago, they started to panic sell the stock. And then on Friday, we found out that there was a subpoena. This is going back last Friday. Well, technically 2 Fridays ago. So in the company didn't say anything about it on the earnings call, which is a little disappointing. It looked like they were maybe trying to hide it. And then on Friday, 2 Fridays ago, the 10Q was published on their website, and it showed that the company had received this subpoena. Now, the company didn't really make any comments. A couple people that I know have talked to the company, investor relations, and investor relations has basically said that subpoena is related to their acquisition of Funk Foods, which is their distributor over in Europe that they acquired a couple years ago. So I don't know what the deal was over there. I don't know what the problem was or why the SEC is looking into it, but it doesn't sound like it has anything to do with U.S. operations. So all of the numbers that, all of these incredible growth numbers that we're seeing right now should not be impacted in any way. It's not like the company is cooking the books, because we know that growth is phenomenal, because we can look at the third-party data from Nielsen and Stackline and see that they're growing U.S. retail sales 214% year over year, and that they're growing on Amazon at 95% year over year. So it's not like they have any way to even fudge the numbers when you have third-party independent services, putting out those numbers every couple of weeks. So, I think this reaction in the stock price is way overdone. Whether or not that 35% sell-off is, partly related to the subpoena and partly related to the lower gross margins. I mean, we'll never know the exact mix, but today the stock bounced off of the 200-day SMA. Looks like it's holding. Looks like some buyers are coming in right now. I got a green candle on the screen. So in a big red sea of just shit today, this is kind of the one stock in my portfolio that actually looks halfway decent.
Yep, absolutely, man. I don't know how anyone can top that. You covered every topic I was thinking about talking about today. But Mark, Money Mark, if you're there, let's hear from you. I'm definitely curious, what got you interested in this larger cap, that the valuation seems stretched based on the traditional metrics you look at. So give us a little bit of background on that.
Sure, and I wonder what you need me for here today with the job Jonah just did on the fundamental side of things. Just a little plug for myself. You can catch me on YouTube, Money Mark Gomes. That's the easiest way to find me. You'll find everything else I do there. So I've known Celsius for well over 10 years. I know John Fieldly. I'm based in Florida here now. Knew the company before I moved down to Florida, but got more intimate with the company upon moving down here. I can concur and back up everything that Jonah said. First of all, with the margins, I do see that as a temporary headwind. This is a company that everybody has to realize that just over a year ago was still in its fledgling stages. What a beverage company will tend to do, and what Celsius in particular attempted to do, was to prove themselves out by having people knocking on doors one by one and getting their product on shelves here in Florida primarily. Okay. What will typically happen with a beverage company, and this is why you shouldn't necessarily invest in beverage companies until they show what I'm about to describe, is if the company can prove that they can be a big hit in one small geography, then the implication is that they can be a big hit in others. And that's what happened here in Florida as of about a year ago. And what happened at that point is that some larger players in the industry took notice, not just Budweiser, but also folks in the industry that work for, let's say, Monster Beverages, right? That have been there and done that in terms of taking on inflection points and said, wow, okay, this company is now blowing the doors off the joint in Florida. That means they could do it nationwide. They could do it worldwide. Let's go and get involved with this company now, because this company has proven itself and proven that it can take off. So Jonah said the rest in terms of the transitions taking place in the supply chain. That's all true. We are seeing them blowing out analyst expectations quarter after quarter after quarter. I strongly believe that, based on what I'm seeing in these our channel checks, that they're going to blow away the December quarter numbers as well. And I think we're well on our way to a $550 million 2022 versus analyst expectations of $486 million. Now, what that means is we're going to get something on the order of 70 to 80% growth next year. Okay. And 550 million in revenue represents 10 times its market cap of $5.5 billion. Right? If you compare that 70 to 80% growth and 10x multiple to a Monster Beverages, they are getting an 8x multiple, but only expected to grow about 10%. So you're getting 7 to 8 times as much growth for only a 25% premium on the revenue multiple. Okay. In a company that has far greater chances of being acquired, for a company that has far greater growth opportunities beyond just next year, and for a company that is definitively taking market share from Red Bull and presumably from Monster, although Monster's too big of a company to say for sure that that Celsius's market share is coming at the expense of Monster. So basically what you've got is a company that is virtually guaranteed to succeed, and the level of that success. I mean, you can see that in the marketplace. I mean, if you're here in Florida, especially, and we're starting to see it around the country as well. But here in Florida, this is a dominant brand. This has gone beyond just a brand that's just is trying to get themselves on the shelf. This is the brand that when you walk into a CVS, this is the first brand you see. You have to go down the shelves to get your Coca-Cola. You have to go around the corner to get your Monster Beverages. This is the front. Yeah, this is the front and center brand. Okay, so you know me, Ben, for a long time. I'm not one to pump. I focus on research. I'm very focused on what I am seeing in the marketplace. So I want to preface what I'm about to say with that, because what we are seeing here in Florida gives them a chance, only a chance. This is not a pumping statement. This is a real statement. It's a chance that this company becomes as big as Monster in the years ahead and possibly challenges the major beverage companies, the Coca-Colas of the world, ultimately, because of the way that they are expanding their SKUs, etc. That's far in the future, okay, and a big if. But this is the way you need to start thinking about the company and keeping your eyes open to start seeing what I'm seeing if you're not here in Florida and seeing the success that they've seen here. And by virtue of that, the success that they're likely to see across the country coming in 2022, as Jonah alluded, as these other retail outlets start to bring in fresh brands.
Mark, that's awesome. I love hearing you talk about bigger caps and the possible growth they can get longer term, comparing it to Monster and everything. I really appreciate that perspective. I want to bring in Gav Blaxberg. I saw you last night briefly. I popped into the Stock Talk Weekly for their Trade of the Week kind of show, and you mentioned Celsius was your Trade of the Week. And, I was pretty pleasantly surprised at that, because we were planning on having this discussion anyway with Jonah and Mark, with the fundamentals and the growth and the value investors kind of seeing eye to eye, matching it up with the 200 DMA. So Gav, if you could give a little bit more color on your Trade of the Week idea on Celsius.
Sure thing, Ben. Thanks for having me on. I think that all of the fundamental side has definitely been covered. I definitely like it from the fundamentals. I was coming at it as a Trade of the Week where I thought I could see a bounce this week from the technical perspective. And the few things that I hit on. So one, we've already touched on this a few times, but Celsius has never touched its 200-day simple moving average until now. So it just touched the 200-day and it bounced off of it today. I'd have to take a look back at it, but I think it's probably up around 1% today, right around there, 1.4%. And so bouncing off of that, in addition with that, I was looking at the RSI. So the RSI has not been as low as it is currently on Celsius since the pandemic lows. So when I look at RSI, I love to see things back near like pandemic lows. That gives me more confidence that it is oversold. In addition to that, a couple of other indicators I was using was the anchored VWAP, so the anchored volume weighted average price. I'm doing this on TrendSpider. So I went back to the January highs because that's when we saw a lot of buying. In fact, a majority of the volume on the stock is right around those January highs at $65 per share. And if you basically tag a anchored volume weighted average price from there, you come to right around 68.40. Or 68.80. So the way I was saying this for the call with my play of the week was I would play this with a tight stop at right around that anchored VWAP because I wouldn't want it going through that anchored volume weighted average price. Essentially, if it was to fall through that, then I think more people would now be perhaps cutting the position, perhaps they've stop set because that's probably near where their entry is, and so there was that. But overall, I saw more risk. More reward than risk with this trade by playing with the tight stop. My second one, if you don't want to go that side, would be at like 63 by the bottom of this volume ledge. But essentially, just because it had already this super quick drawdown, I guess it was like 35% in 10 bars if you're going with the sessions. And just based off that, I thought there could be a nice little rebound here, especially back up towards. And then my other place where I would probably, maybe if I was just scalping, go towards would either be the anchored volume weighted average price from the highs of June, where again we saw a lot of activity, which comes at around $80. And then if you want to go all the way back to the 100, you can go up to 83. But essentially, I saw managed downside with strong potential upside, and then of course all the fundamentals have already been covered. But I thought that was the technical case.
Great, thank you, Gav. Really appreciate that. Jonah, Mark, do you guys have time for a couple questions?
Yeah, I mean, so someone just commented on my post saying that Celsius is expensive. It's really not expensive
at all.
Like Mark said, a Monster is trading at 18 times sales, and they're going to give you 18% growth this year and probably 10% next year. Celsius right now is trading at about 18 times this year's sales with 158% growth, and trading at less than 10 times sales next year. So Mark thinks they'll do closer to 550. I think they'll probably do closer to 600. I think they'll come in this year probably around 310. So I'm looking for, around 90% growth next year. So stock trading at less than 10 times sales with 90% growth. Gross margins will absolutely go higher next year, thanks to all these new investments they've been making in logistics, infrastructure, supplies, etc. And we're going to start to see more of those 100,000 or 118,000 authorized locations bringing Celsius in, and then also expanding shelf space, taking in the coolers. So, I mean, this, the story's not done. I mean, I never expected this stock to pull back 35% after they reported a 35 or 30% blowout to estimates. But the most impressive number from that Q3 earnings report was quarter over quarter growth. So from Q2 to Q3, 46% sequential growth from Q2 to Q3. That's insane. So, I mean, that's just the power of having 224 DSD partners delivering this product to stores on a, daily or, every other day basis.
Yeah, I think part of that sharp move did have to do with that subpoena after hours on Friday. I noticed that's when it really started tanking. And in my experience, usually those kind of SEC investigations are all ado about nothing. And that's great that you did the homework there to tell us what it was about with that acquisition. So it's probably not a concern. I got, actually, we had the one question that was withdrawn. So I think we're good on Celsius, unless, Mark, was there anything you wanted to add to that last comment?
Yeah, I mean, I would just echo what Jonah said, and from a valuation perspective, what investors really need to look at is future valuation. So as well as beauty being in the eyes of the beholder. So when you look at a Monster Beverages and the revenue that they generate, right, what a company like Coca-Cola or Pepsi, etc., will look at in an acquisition target is how big can we make this company, okay? And when you look at Celsius and how big a larger player could make Celsius, given the success that they've shown in Florida and now seeing nationwide, this is a company that can easily be 5-10 times larger at some point several years down the road. And that's exactly what those beverage companies look for in an acquisition target. So at a valuation level much lower than this, you would definitely see acquisition offers come in for the company because of how attractive it would be for Pepsi or Coca-Cola. It's basically a no-brainer for them at levels like this. So they either can grow on their own, as Jonah and I see them doing, or they can be acquired and grow under a larger entity. And in either scenario, the valuation is well justified at these levels.
So the industry, the energy drink industry, is growing at around 10% a year. So sells 10 to 12%, although that's expected to slow down. And I think that for the next 5 or 6 years, they're expecting about an average of 8 to 9% per year CAGR. But that means that Celsius is currently growing 15 times faster than the peers, than the industry as a whole. So you don't see that very often. I mean, that's beyond hyper growth, really. I mean, there are just very few companies out there that have the ability to grow 15 times faster than their peers.
Yeah, and part of the reason for that is the shift, right, from the types of energy drinks that people are looking for. They're looking for the healthy energy drinks. Monster now has this kind of moniker of being unhealthy or dangerous, whereas Celsius is being viewed as being healthy, and they could be the poster child for healthy energy drinks, which obviously bodes well for their future. Considering what Monster became, I honestly believe there's a better than 50% chance that that's what Celsius is going to become.
And I do think in the next 6 months, we're going to get an announcement that they're going into Canada, but Canada is a little bit more strict on caffeine per can. So Celsius will probably have to come out with a lower, caffeinated beverage. So right now the cans it's 200 milligrams for the skinny cans. It's 300 milligrams for the larger heat cans. They'll probably have to come out with another version at 100 to 125 milligrams for Canada. But I think that's also good. Like, I think it would be good for them to have a light caffeine version for people that don't want 200 milligrams. I don't have a problem with 200 milligrams. It doesn't impact me. It doesn't make me feel nauseous, lightheaded, or anything. But I do know people that they're more sensitive to caffeine or any stimulants. So I do think that would be really good. I think that would open up the market to even more people. I also think it would open up the market to bars and restaurants. Red Bull and vodka is still a very popular drink at bars and nightclubs. And if Celsius can come in with a lower caffeine product, I think then that gives them another another channel to sell into.
Well, guys, the market loves what you're saying. At least the 300 people here. The stock has hit new high a day while you guys were talking. So great conversation, guys. Give Jonah a follow. Give Money Mark a follow. Gav Blaxberg a follow. All of these guys provided great content to the show here today. You guys can hang on if you'd like. We're going to move on and talk about a SPAC, BKKT. And let me set it up for our guest, Kris Tuttle from SPACVest. BKKT is a SPAC that went up recently, man, from $10 to $50 in a matter of a few days after they announced a couple partnerships, one with MasterCard. I forgot which the second one was with, Fiserv or something, really big companies. And the stock is now 85% shorted, and it's come down rather dramatically. From $50 over to, what are we at now, like $17 or so. So we wanted a chance for Kris from SPACVest to give us a little overview on the fundamentals. Has done some research on BKKT, and question is this a real company? Is this a market cap that it can grow into, and potentially some people can make some money if the shorts have to cover at some point?
All right. Well, just to answer your question, Ben, straight up, it definitely is a real company. And, the stock had a huge reaction, as you pointed out, and it has been heavily shorted since then. Short interest doubled, I think, on November 9th. So the shorts are all over it. The reason that I actually started buying some shares today at these prices, because I'm doing a deck on it, because at these prices it's a lot more interesting. Why is it a real company? Well, the main reasons to care about this, other than the short interest, is the management team here is top flight. It's a team from Citi Consumer Banking. They've got some senior guys from Coinbase on the team. Their backers are Intercontinental Exchange, which is a monster, and clearly, their partnerships with MasterCard and Fiserv are also monstrous. Fiserv is a gigantic infrastructure company in payments. There's no analyst coverage of this name yet. There definitely will be because of their size and pedigree. Just a quick note on what is their positioning. They're not really a crypto company. They definitely are involved in crypto, and that's part of the story. But what they're marketing themselves as is a technology platform that can be used by these other large companies to enable their customers to trade a whole variety of digital assets, crypto, Bitcoin, Ethereum being one. But the really important ones that Bakkt has a unique positioning in are loyalty points and miles and gift cards. That's actually $1 trillion current market that is very underserved today. That's going to double in the next few years to around $1 trillion. So not even considering crypto in kind of looking at the company, or in-game assets, which is another area they're trying to get into, or they will get into. And so they have something unique there that's an obvious on-ramp for them to get more relationships and more consumers on their platform. I think it promises to give them a very low customer acquisition cost, so they can grow their user base, by millions without having to spend directly on going out to get those customers via marketing. They got a bunch of different ways to monetize, including conversion fees and spreads on all those different kinds of transactions. Things like miles and loyalty points, they probably have a much more sustainable margin than guys like Coinbase, or just, if you're trading Bitcoin, that's going to commoditize quickly if it hasn't already. So, I think this is a real play in this market. It's a little early, which is part of the challenge in terms of valuation. There aren't models or estimates yet for this company, but one of the things I think you can anticipate in the short term is they're going to announce more partnerships. That's their core strategy right now. Get these partnerships, add millions and millions to their customer base, and then grow that as the traction with transaction volume picks up. You'll start to see that reflected in their reported revenues. So, I think this is a very high quality company in this space with some unique advantages and obviously some monster partnerships. So I think it's going to take them a little while to maybe grow into the current valuation, but with this kind of short interest and the possibility for them to, like, any day announce another kind of partnership like the two that you've already seen, I think there's a lot of potential upside in this stock. So I started basically kind of legging back into it here at 17 and change after the big run up. I have no idea if 17 is the bottom or 12 is the bottom, but I like having a bunch of short interest out there to drive demand if these guys execute on another partnership.
Yeah, no kidding. I like that too. Man, is that 85% real? I've never seen a number that high.
I'm not sure that's real. I'm looking at pretty good data right now. Like I said, the short interest went from 6.4 million to 13.5 million on November 9th. That's the most recent accurate number I have, but that's 31% of the current float. So, no matter what the percentage is, it's a very meaningful percentage. And, it's brave to be short. Obviously, it's been brilliant from, $30 or $40 a share. But I mean, this is, like I said, this is a company that could announce, they announced 2 monster partnerships in like a week. They could announce another one, tomorrow. And then I think that the shares would again have a, volatility back to the upside at that point. And if they can grow and demonstrate some traction, I think they've got a bit of a moat in this whole loyalty miles and gift card segment, which is notoriously underserved right now. I mean, everybody and his brother will exchange Bitcoin in whatever account or wallet you might have. But this other stuff is a lot harder to do, especially at scale and with kind of an institutional quality, which they get with ICE and Starbucks and MasterCard and Fiserv is all folks that they're currently working with.
And a question about their business model, their product offering, really. If Bitcoin, does this really depend on Bitcoin price doing well, or what if some other crypto takes over?
I mean,
how would that work out for them?
I'm Xing out right now for my slide deck. I'm not even considering crypto as part of the story. I think crypto is just a thing. Think of it like dollars. But the real story for these guys is in the diverse digital asset space. So, I mean, personally, I've got a pile of gift cards and loyalty points that I have absolutely no interest in and would love to just convert them all into something, whether that's Starbucks points, whether that's Bitcoin, any of that stuff. And I would happily do so through a platform like this. The other thing to realize is that a lot of vendors want to start offering their customers, how do I say it, like interest on their digital holdings. So that's another thing that these guys would enable someone to do. You could whatever digital asset you have, you could start offering holders of that digital asset interest or additional loyalty points based on their holdings. So, again, I think of Bitcoin and those kind of things as really commoditized from a transactional standpoint. So I'm really looking at this as sort of more of a digital asset convergence sort of play than Bitcoin in particular.
Got it. Very interesting. Any of other speakers wanted to add anything? You can jump in. Jared, you got a question?
Yeah, I think that there is some sort of overhang in terms of, I don't know if exactly how it works, but there's some sort of dilution or warrants or something that is going to be happening in January. Is that correct?
Kris, you there?
Yeah, I'm still here. It looks like Jared is connecting. I will.
Oh, did he hear his question?
No, I just see him as connecting on my
he asked a question, maybe it didn't come through. He asked about some dilution or overhang that's supposed to come off like in January.
Yeah, that's one of my top reasons to worry. I've got a slide at the end here. I'll post this deck later, but yeah, the ICE ownership and with SPACs in general, there's this overhang risk as additional shares become registered. And people have been submarined by these kind of overhangs in the past, so that's a real risk. It's hard to handicap because I don't know what level of price sensitivity those folks are going to have, and I don't yet. It's hard to handicap what kind of institutional appetite we might see if analysts actually start initiating coverage of this name.
Okay.
Okay, thank you.
Sorry about that. Yeah, got it. Thank you for that background there. All right, so if there's nothing additional, that was great background on Bakkt and Celsius. I appreciate you for your time. Well, hold on, we got one question from Savvy Money Show. We'll take that. Go ahead, Savvy.
Hi, yeah, I just wanted to mention, I don't know if you said it or not, BKKT recently had their earnings and they had like a 38% growth on it as well, year over year. So I know you mentioned like with Starbucks and the loyalty program, but the fact is we've seen recently some of the SPACs and de-SPACs in the fintech space tanking, and once their earnings come out. But when we see earnings like this with BKKT, it kind of, whether you're in it just for the short squeeze or whether you're in it for the long term, I think it does bode well for the future.
All right, great. Thank you for that comment. All right. Thank you, everyone. Go ahead and give SPACVest a follow. He's got a wealth of information on SPACs. I think he has some newsletters and other information on your website regarding other SPACs. Is that, you want to tell us a little more about that, Kris?
Yeah, I've been covering the SPAC space for a while. We started SPACVest to take advantage of all the different opportunities that come into the market. Now that things have settled down, we're hunkering down more on a bunch of SPACs that have de-SPACed and been sold off, and in many cases are looking like really good long-term opportunities at good valuations. So we provide, you'll see every deck that is made available in SPAC land come through our site, and basically we cover everything that's going on there. So if you're interested in SPACs, de-SPACs, and warrants and all that, definitely give SPACVest a follow and check out the site to see if it might fit into the kind of things you're looking for.
Great, thank you very much, and give us StoryTrading a follow as well. We got a lineup of Spaces shows we started recently on Sunday nights, Monday afternoons, and Wednesday evenings. We got a wealth of content over on our YouTube channel as well. So we'll be back here for, we covered a lot of the trade stuff today, so maybe a shorter session at 4 o'clock on Spaces. So we'll see you again